if you own gold, if you own silver, or if you are even thinking about buying either one, stop scrolling right now, because what happens in the next 24 hours could change the direction of your money. Something is shifting quietly behind the scenes, and most investors have no idea it's happening. Stay with me for the next few minutes, because by the end of this video, you will understand exactly what's coming and how to protect yourself before it hits. Welcome back to Silver and Gold Watch. I'm here every single day breaking down the real story behind these markets. Not the noise, not the hype, just the truth. And today's truth is a big one. Right now, gold is trading above $4,000 an ounce. It's sitting near its highest level in 7 weeks. Silver is even more electric. It just touched levels near $62 an ounce. That's a level we haven't seen since June. Think about that for a second. Silver has more than doubled in price over the past year. Gold is up roughly 25% over the same period. These aren't small moves. These are historic moves. And the question everyone's asking tonight is simple. Is this the top, or is this only the beginning? Let's slow down and unpack what's actually driving this. For months, the entire precious metals story was built around fear. Fear of war, fear of inflation, fear of a Federal Reserve that couldn't make up its mind. But something changed this week. And it's not what most people expected. Oil prices have been falling hard, nearly 10% lower in just the past week. Why does that matter for gold and silver? Because oil is one of the biggest hidden forces behind inflation. When energy gets cheaper, everything built on top of energy gets cheaper too. Transportation, manufacturing, even your grocery bill. So when oil drops this fast, the entire inflation outlook shifts lower almost overnight. The reason oil is falling comes down to geopolitics. There are new signs of a possible agreement between the United States and Iran. Talks have been described as very productive. There's also a fresh shipping arrangement involving the Strait of Hormuz. For those unfamiliar, that narrow strip of water is one of the most important oil transport routes on the planet. A huge portion of the world's energy supply moves through it every single day. When tension eases, their even slightly global oil supply expectations shift and prices fall. Now here's where it gets interesting for you as a gold or silver holder. Normally, when geopolitical tension cools down, precious metals struggle. Investors feel safer. They rotate out of safe haven assets and back into stocks. That's the textbook reaction. But this time, something different is happening. Gold and silver are not falling. They're climbing. Silver just posted one of its strongest weekly rallies in months. Gold pushed to a fresh multi-week high. Why would that happen if the fear trade is fading? Here's the real answer. And this is the part most channels won't explain properly. This rally isn't about fear anymore. It's about interest rates. Lower oil means lower inflation pressure. Lower inflation pressure means the Federal Reserve has less reason to raise interest rates, and that changes everything for gold and silver. These metals don't pay interest, they don't pay dividends. So when interest rates are high, investors can earn steady returns elsewhere, and metals become less attractive by comparison. But when rate hike expectations fade, that competition disappears. Suddenly holding gold or silver becomes far more appealing again. Just days ago, markets were pricing in 2 more rate hikes this year. Now that number has dropped to just 1. That single shift is a massive deal for precious metals traders. It tells you the market believes borrowing costs are close to their ceiling. And any asset that doesn't rely on interest income becomes instantly more attractive when that belief spreads. But that's only half the story. Let's talk about the labor market. Because this piece of data quietly shook Wall Street this week. Private sector job growth came in far weaker than expected. Only around 44,000 new jobs were added. Economists were expecting closer to 70,000. That's the weakest reading since the start of the year. A soft labor market often signals a cooling economy, and a cooling economy usually means the central bank has even less justification to keep rates elevated. This is another quiet signal, pushing money back toward gold and silver. Now, not everyone at the Federal Reserve agrees that rate hikes are off the table. One of the Fed's own governors pushed back publicly this week. She made it clear that if inflation doesn't continue cooling, the central bank may still need to raise rates before year-end. That kind of comment creates tension in the market. On one side, you have falling oil prices and weak jobs data suggesting the Fed should stay patient. On the other side, you have Fed officials warning they're still ready to act if needed. That tug of war is exactly why we're seeing this kind of sharp price action in metals right now. Markets hate uncertainty. and uncertainty often pushes capital toward gold. Let's also talk about something most retail investors completely overlook: central bank buying. While everyday investors debate whether to buy gold coins or silver bars, institutions around the world have already made their decision. Reports show that large institutional investors, particularly out of China, have continued increasing their positions in gold-backed assets. This isn't random buying. This is strategic positioning. Big money often moves quietly and early. By the time the average investor notices a trend, the smart money has usually already built their position. Central banks have been accumulating gold for years now as a hedge against currency risk and global instability. That demand doesn't disappear overnight. It provides a steady floor underneath the gold market, even when short-term news cycles create volatility. There's also something happening with currencies that deserves your attention. Just recently, the United States and Japan coordinated a currency intervention to help stabilize a weakening yen. This is rare. This is the kind of move that only happens when policymakers are genuinely concerned about currency stability on a global scale. When major currencies show cracks, investors often look for something outside the traditional financial system to protect their wealth. Gold has served that role for centuries. Silver increasingly plays that role too, especially now that industrial demand for silver is exploding alongside its investment appeal. Speaking of silver, let's talk about why it's actually outperforming gold right now. This matters because it tells you something important about where money is flowing. Silver isn't just a monetary metal, it's also an industrial metal. It's used heavily in solar panels, electronics, electric vehicles, and a wide range of green energy technology. So when silver rallies hard, it's not only because investors want a safe haven, it's also because industrial demand is climbing at the same time. That combination creates a much stronger and more explosive move than gold typically experiences. This is why we're seeing what analysts call ratio compression. The gold-to-silver ratio measures how many ounces of silver it takes to buy 1 ounce of gold. That ratio has been falling sharply. It's now sitting well below 70. Historically, when this ratio compresses quickly, it often signals silver still has room to catch up relative to gold. Some long-term investors view a falling ratio as one of the clearest signs that silver is the more explosive trade of the two metals right now. So let's bring this all together and answer the real question. What does this mean for you if you already own gold or silver, or if you're thinking about buying tomorrow? First, understand this. Volatility like we're seeing right now isn't necessarily bad news. It's actually a sign that the market is repricing risk in real time. Oil is falling, inflation expectations are easing, jobs data is weakening, rate hike odds are dropping, central banks are buying, currency stability concerns are rising. All of these forces are colliding at the exact same moment. And when that many variables move together, prices tend to move fast in one direction. Second, understand the risk on the other side. If tomorrow brings stronger than expected economic data, or if a Fed official signals more aggressively that rate hikes are coming back on the table, this rally could cool off quickly. Metals prices are incredibly sensitive to expectations. It's not always about what actually happens. It's about what the market believes is coming next. That's exactly why watching tomorrow's developments so closely actually matters. A single data release, a single Fed comment, a single geopolitical headline, any of these could shift sentiment within hours. Third, and this is important, don't make decisions based purely on emotion or headlines. The biggest mistake investors make with gold and silver is chasing price spikes out of fear of missing out or panic selling during short-term pullbacks. Both of those emotional reactions tend to hurt long-term investors far more than they help. Understanding the forces we just walked through gives you the ability to think several steps ahead instead of simply reacting to whatever's trending in the news that day. Here's something else worth remembering. Silver has climbed more than 150% over the past year. That kind of move naturally creates two types of investors: those who feel like they missed the opportunity, and those who believe the bigger move is still ahead. History has shown that once industrial demand and monetary demand start moving together like we're seeing right now, that combination can sustain a trend for much longer than most people expect. That doesn't mean prices move in a straight line. There will be pullbacks. There will be sharp corrections. That's completely normal inside any strong trend. What matters most is understanding the underlying forces driving the move rather than reacting to every single daily swing. So where does that leave us heading into tomorrow? Watch the Federal Reserve commentary closely. Any hint about future rate decisions can move these markets instantly. Watch oil prices. If that Middle East agreement solidifies further and energy prices keep falling, that reinforces the disinflation story supporting metals. Watch upcoming economic data, particularly anything related to employment and inflation. Weak data generally supports gold and silver. Strong data can pressure them lower in the short term, and keep an eye on central bank activity. When major buyers keep accumulating quietly in the background, it tells you long-term confidence in these metals remains firmly intact regardless of daily price swings. This is exactly why I wanted to get this video out to you before tomorrow. Markets don't wait for anyone. Prices can move dramatically within a single trading session, especially when this many forces are converging at once. Whether you're holding physical gold, silver coins, ETFs, or you're simply watching from the sidelines deciding when to get in, understanding why prices are moving matters just as much as knowing that they're moving. Precious metals have protected wealth for thousands of years through wars, through currency collapses, through recessions, through periods of runaway inflation. What we're witnessing right now is another chapter in that very long story. The specific headlines change: oil deals, Fed governors, jobs reports, currency interventions, but the underlying pattern remains familiar. Uncertainty drives demand for real tangible assets, and right now global markets are absolutely full of uncertainty. Before you go, I want you to think about one thing. 12 months ago, silver was trading at a fraction of today's price. The people who understood these signals early positioned themselves ahead of the move. The people who ignored it are the ones asking today why they didn't buy sooner. Markets rarely give second chances that look exactly like the first one. That doesn't mean you should rush into anything blindly. It means you should stay informed, stay ahead of the headlines instead of reacting to them after the fact. That's exactly what this channel is here for. Every single day, I break down what's really moving gold and silver in plain, simple language so you're never caught off guard. No hype, no fear-mongering, just the real forces behind the numbers you see on your screen. If this video helped you understand today's market a little better, hit that like button right now. It genuinely helps this channel reach more people who need this information before making decisions with their money. If you haven't subscribed yet, make sure you do it today because tomorrow's move could be just as important as today's, and you don't want to miss the next update. And I want to hear from you directly. Drop a comment below and tell me this. Do you think gold and silver keep climbing from here, or are we due for a pullback? I read every single comment and I'll be responding to as many as I can. Thank you for watching Silver and Gold Watch. Stay sharp, stay informed, and I'll see you in the next video.